So good morning, good afternoon to everybody, wherever you are in the world. My name is Todd, coming to you with our first ever Miyagi Community AMA. So this is kind of just going over indicators and trading and strategies as requested by the community. No information in this broadcast should be considered financial advice, nor is it deemed as such. This is just purely information only. So it'll be obviously up to the end user to utilize what they learn out of this in their own implementations. Now, let us start with just kind of a quick market direction. So overall, we've been kind of heading up here. Really, we're in a no trade zone for now. You're going to see either legs up from 23.3. If we can get a 4-hour closure above 23.3 thousand, you're open to 24. And conversely, if we break down out of this channel at 22, I've got 22.2 because that would be a range low. Alternatively, you could go for a candle closure below 22.5 for direction down. So that's kind of the overall direction of the market here with what we've got here. Total 2 is kind of the same thing. Basically, we've made nice moves up from our lows in December. We are sitting at a significant resistance level. About 600 billion would be a good area. And then when you actually look and scroll out on the daily, so this is kind of what I had on the daily here. Keep in mind this indicator is not tuned for this daily. This is tuned for lower time frame. But what we were thinking is, if you ideally get a closure above 693 billion, that's where the bull run starts. So that'll be very good for all of us here. And I will just get into the questions right now. So that's kind of my thoughts on the market. I think for now, just trade safe and trade as if it's just chop. We could still see a little dip and then further run, right? So not providing any sort of financial advice on that. Just trade as safe as you can. Now, if we can get into some of the questions, I'm going to go through the channel. And so, yeah, let's just take a look at here. So actually, here's an easy one. I'm just going to start with the super easy ones, and then I will kind of react to them with a thumbs up. So the difference between the 4 and 1, yeah, let's just get that one out of the way right quickly here. So the difference between all of the scripts is all of the scripts have different purposes and or have different conditions to entry on them. So just starting with the easiest one, this is actually the 4 and 1. So the 4 and 1 gives you EMA, MACD, RSI, VWAP, adds on volume filtering, it adds on a time filtering so that you can enable or disable trades. And then from there, you're able to set out alerts based on your conditions. Now, so the 4 and 1, as it looks, this would be kind of an example. I think this guy is on EMA, RSI, VWAP. If you simply just switch it to counter trend, this is how the majority of us trade. We have counter trades. Counter trades are very profitable in the chop and or volatile markets. You can also set this up to be trend following. It gives you a multitude of conditions within these, and as kind of stated before, it's not black box. So what that means is it's not a black box strategy. It's not this script only does one thing. It is this script does multiple things. So, if you wanted to play on lower time frames, you could. You want to change your actually, sorry, this is the wrong one. If you wanted to tick enable EMAs for trend direction, and you wanted to have a higher VWAP setting, like you could do this. So you could do 3 for counter trend, 1 for trend following. That'll change your entry positions, stuff like that. So the 4 and 1 is just kind of the basic. Let's just get started with it. The 6 and 1 is the new one that everyone should be aware of, because this is really, once you get into it, it's very I don't know how to explain it, but it's a very powerful thing, this rate of change. So like I say, some of us here have it dialed really well. A lot of us are on the call that have it dialed, especially Al. You've got it dialed perfectly fine. We'll go over that in a more private manner, just kind of how to utilize it, because as stated before, there are prying eyes out there that really would like this and would like to have something like that. And anyways, we don't want to go that way. So this would be kind of an example. So utilizing the 6-1 with conditions, that it would allow you to kind of smooth your entries even further. So the basis from a good explanation that I can give you all is if you started with a basic EMA RSI VWAP, although it's not basic, it allows you further control with the 6-1 with the added ROC. So if I simply just took off EMA RSI and just ran on VWAP, just a sec, I gotta just mute everybody here for a sec. Okay, so if you can just mute yourselves, that'd be perfect. Okay, so now when we get back to the initial script, so VWAP is a good way to trade, however, can get bagged. So that's why you add in EMA, RSIs, filter it. These are perfect trades, absolutely perfect. Might be a little light on the trade count. Keep in mind this is on a 15-minute as well too, but this would allow you to hit highly volatile coins such as APT. You know, other than some of these, you just have to dial up the shorts maybe a little bit or allow for some DCA. That's still a pretty good way to trade. The 6-1 improves on that with the added dual EMAs and the ROC. So dual EMAs, this is kind of a back-ended question where I'll have to give it to, I'm going to end up actually giving it to Victorious for the question. The dual EMA is actually going to be very powerful because it can allow you multiple EMAs within. So if you wanted EMA 1 as 15, you could do 15 here, and then this guy could be 1 hour. So that means that you have a fast and a slow EMA, and both conditions have to meet. So that's kind of the thing. So when you're actually working with EMAs, they're great for trend detection and direction, especially when you have it on a high time frame. But the faster EMA will lose trend quicker. So once that condition is gone, that can help you to basically base your indicator direction based on that with the dual EMA confirmation. So that's that. What is this one? This is kind of an example degen config. I'm running this. This is a possible config from the degen course. This one's kind of based on counter trend longs and shorts based on volatility, utilizing volatile coins, and then you can add trend longs in. This is the Miyagi SAR. So like I say, obviously the main risk here is sometimes with your trend signals, this might not get out. You can't really go for a high TP with this. This is going to be a quick trade time. This one might not. You might have to provide some DCA in and out should you choose to run that. That would be pretty much what NinjaWib is using to make 55% in 13 days. That is from the degen course. So now the 6-1, the 2 EMAs, we covered that. Basically, like I said earlier, if you actually plot them and you look at them, there'll be a fast one, there'll be a slow one. So you could use something like this. So you could be trading a lower time frame, but have higher time frame EMAs that give you direction. And then when you come to the VWAP, you can utilize those for the trend direction, right? So because there's nothing worse than being stuck against a major trend, right? Like this is kind of the beauty thing about this is just relying on this only. Let's say if we just kept these at 3 and 3. Let's see what this will do. So if you keep these at 3 and 3, that's just standard settings for all. Now enable EMAs for trend direction. That's going to gather the EMAs. Now granted, this is a little bit same here. So if you went over to let's just say 3.5. This would be a good way to have a little bit of a distance and or spacing here in this area. Another alternative thing you can do for filtering is dial up your shorts should you want it. So you could say, okay, well, let's only enable shorts from 85 to 95. See what that does. See, it always takes a little bit of fine tuning per pair. This is a highly volatile coin. Regardless, that would be kind of an idea for you is utilize the EMAs for trend direction, utilize multitude of confluence for it. So now when we get into the here's the easy one. What exchanges can I use in US that work with the Wick Hunter robot? So that one, as far as basically, I could say you can use Finandi. That would be one to check out. Finandi will work for you, and basically you can link it up and then run it from there. It just be very careful of your jurisdiction, because in the United States, obviously there are restrictions to crypto trading. So be aware of that one. So that one goes good there. So the 10-1, which of the 10-1 tools are best in a bull bear chop market? Okay, let's go to, do I even have one with the 10-1? Okay, yeah, so here's the 10-1. So really, so I've got a couple different configs here I could show you. So the first one here is going to be RSI ATR on the 10-1. Let's just get rid of the RSI. This is on APT. Turn off S trend. Let's get rid of that. This is ATR, and we've got ATR dialed here, you know, basically with a standard multiplier. Now, if you wanted to even increase this a little bit further, you could go up on the multipliers to 3. So if I added just a little bit of spacing on the multiplier, that might get rid of some of the other trades. Just get everybody to mute, just so that we're not too loud here. Okay, yeah, so if you could mute yourself, that'd be great. So this is kind of an example here. So if you wanted to utilize the 10-1 simply for bull market, well, actually, I'm thinking about it wrong. So this would be the counter trend for a bull market. So if you had a bull market, you could do something like this. You could go down to 1 for the trend following, and you could basically catch every dip with it if you wanted. This would be a decent way. That might be a little bit too much though. Your trade time might be too long. You can also segregate it like this, where you can just have a little bit more on the dips. This would be a very nice way to trade, because in essence you're longing every micro bounce, and then if you kept your short VWAP at, well, actually this is on ATR, if you kept this at a decent range, you could have something like that where you come in, you've got these nice bounce longs that are coming in. Granted, this is a 15-minute chart, so you should be able to go for a decent TP. That's actually not too bad. If you ran it on close, you'd definitely get out on these wicks, that's for sure, right? Once per bar is also good too. However, it's hard to accurately back test and depict where that fires. So this would be a decent strategy on the 10-1, because like I say, counter is going to have a quicker trade time than trend follow. But should you actually if you actually wanted to utilize trend follow, you'd probably want to go EMA MACD. That could be trend follow, or simply step up and use the SAR indicator, right? So trend follow, SAR will be very good for it, but the main thing is there is always the issue with bags at or near a local top. So if I just get rid of this and let's just load it on a default, I'll show you how the trend follow can be helpful on the 1-minute default, but I can also show you how it can bag. So if you just simply load this here, no long percentages above is very helpful. So that's good. Definitely enable high time frame. If you're on the 1-minute, it's, I don't think this chart is able to be conquered, truthfully, because it's just you end up with a lot of issues, right? So now you can enable RSI, something like that. That would be a good start. However, if you actually looked and you wanted to run based on the actual bull run, you think the bull run's coming, truthfully, I think your best bet is to just run simply based on no filters and repeat signals, right? Truthfully, if that bull run is here and you've got the ability to have, you'd want no filters on the longs, right? So if truthfully, if you've got that bull run coming in, if we go over and we look at our chart here and you go plot the daily, if we crossed up above, let's say 25K, you know, like we are looking fairly good, like we might cross up. This is a lot of volume incoming. If we were to catch that and you wanted to go full bull run, if you had the Miyagi Pro package, you'd have everything plus SAR, the Miyagi version of SAR. You could utilize something like this. The main thing is if it's a bull run, don't trade in the opposite direction. So you could do something like this, where you have all these string longs. Keep in mind, this is no filtering, right? I don't really think that any of this filtering will, you know, some of this filtering can help you, right? So let's say you wanted to just use ADX for an instance. Let's see what this does. This is 25 to 60, so this will allow you to trade the runs. If you wanted to go 0 to 25, this will get you chop only, but you will probably miss out on a lot of trades. And we'll see what that does. Yeah, so you miss out on a bunch of these trades here, and you still have longs at or up or near at a top. Now, if you disabled the repeat signals, you actually stand a chance to get out of these trades, right? These will have some DCA. Even this guy, you could probably get that out up here. And keep in mind, this is without the no long setting. So if it's actually a full-on bull run, I would probably most likely just be running something that was, you know, repeat signals on, no long filtering, and then you know, it'd be up to you whether or not you want to utilize RSI. So you could say, okay, cut RSI on the chart time frame, which is the 15 at 60, or you could go to a higher time frame, which probably would catch that maximum a bit better. It just depends. Like I say, you really have to have the RSI loaded on that chart. Like this does a good job here, but you avoid that run, right? So now back to the 10 and 1, there's another config that you should be aware of. So that's ATR. That would be utilizing ATR as sort of a trend follow, because you have this multiplier down low. Keep in mind, this is utilizing the EMAs for trend direction. That's the EMAs based on this setting up here. So that is actually based on the chart. What you can do is if you wanted to change and tweak your EMAs, like I say, the longer the length, the more stable the EMA is going to be. So just to show, we'll just use the SAR indicator here just to kind of show an example, because that was a question here as well. So here's one. This is actually the SAR indicator with the 1 hour EMAs. So green is obviously above red, utilizing the 14 and 50. So let's look at the change from 14 and 50 to 50 and 200. 50 and 200 is going to be lagging. It's going to be way down below. I'm in no way, shape, or form saying 14 and 50 is better. I'm just saying it's more quick to react, right? So that's kind of the nice thing about this is, let's just say if I can find, well, here'd be an easy way. So if I dialed this back, if you dialed it back, and let's just say you went with a, yeah, let's just try 9 and a 20. Let's just do something lower length. Lower length means that it's going to be lesser period look back as far as the EMA. So it's going to be more trend following, and like quicker is the word that I want to state. It's quicker for following. So this is still a 1 hour EMA, but you notice it follows price action quicker. So in here, when it flips short, you don't trade any longs. Here it has to flip up long. That's kind of the condition, and that's kind of what's beautiful about the mix and match within Miyagi is it's not black box. It's just a multitude of indicators compiled together in a nice way for traders like us to utilize to the full advantage. So here you won't see shorts unless below the EMAs, right? And conversely, you won't see longs unless above EMAs. Now, the next thing that I'm going to add, probably once I get some time next week, is a percent setting above EMAs, right? Because there are times where you'll be in that EMA trend, but really no signal should be thrown because it's not a clear trend, right? So that could be another way that you could utilize it too. It's more granular control. So the 14 and 50 for me, I think is a pretty good baseline. You can go lower, you could do 9 and 20, you could do like any sort of combinations, right? So back to the 14 and 50. 14 and 50 will give you a little bit less chop. So overall, your trend on on this pair, FDM, has been long until the point the price crossed down at 0.46. So you won't see any more longs until we cross above here, or we flip short. You might see some shorts coming in, right? So the EMA is that one is gone over that one. Now when you go into the time frames on the 1 minute time frame, question is asked, is it better to go with once per bar or once per bar closed? So this one for me is subjective because even to this date, I've tried both. I still try both every once in a while, and it is 50-50 for me every time. Like I say, there's pros and cons. So if I just get rid of first let's back up. If we start with trend indicators, you always need to go once per bar close. Trend indicators need to be based on bar close because you don't necessarily want to find signals firing up here at or up here that just disappear and don't confirm because you can't accurately backtest, right? So that's kind of been a ongoing battle. I've found I personally hate repaints with a passion, so that's kind of the thing that we have here is we have the ability to trade with 0 repaints. Realistically, I haven't seen a repaint yet on the SAR indicator, which is great. 10 and 1, I've heard it might do it on EMA MACD for trend follow, but then again, I don't really. I heard that once, and it was not from a very credible source. So not overly sure on that EMA MACD. Might have to follow up on that one again. But so trend follow, definitely use once per bar close. Now counter, it's going to be up to you. So the point of the Miyagi backtester is to accurately backtest and depict based on signals shown on the chart. So some of you will run once per bar to be quicker. That means that you might have trades here for exits. You might have a short here and down. But basically, when you come to look at once per bar close, these are actually depictable on the chart, and you can say, hey, this is where my trades have begun or what happened. It's also easily verifiable within your alert log. Once you go to once per bar on the alerts, and this is actually what that looks like. So you come over here, and if you went 10 and 1, you went open long, once per bar close, etc., yada yada. This can get dangerous because once you see large pumps such as, I think Gala was something that rallied pretty good here. You might have the potential to get bagged earlier, like in here. Once per bar might have fired in here, resulting in a lot of DCA used. Ultimately, you would get out. This isn't a large move by any means, but like I say, that's the purpose of the Miyagi, is to give you confirmed signals based on bar close. So for me, I prefer to use bar close, so that way my entries can be market when it fires at bar close. And then even if I utilize some DCA, I think it's acceptable for my terms. But at the end of the day, I still want to be able to see the signals and how they fired so that I can back test and improve. Whereas really it's impossible to build an indicator that it will show based on once per bar touches with all the other stuff. Like that would be a large undertaking. So now just gonna take a quick sip of coffee here and read, and we'll go over the, based on what time frame should we start and stop SAR to catch trend. Okay, so that'll be the next one. Just give me maybe a 10-second break. Okay, so this one's kind of subjective because truthfully, I don't think anybody's got this one figured out. So what I can state is if you're utilizing SAR, you're probably utilizing it on a 1 minute time frame. You'd have the ability to do kind of really whatever you want with it. So you can use RSI as a filter. You could go down to the 15-minute RSI. You could utilize something like that. Where is, and I got something else holding us out here. 5 and 15. Yeah, so that's kind of the tricky part about this. So disable RSI, let's see what we got. You should have string longs the whole way up here. If you're trying to catch tops like this and catch a run like that, one thing that you could do is you could utilize total 2, which is something that I've done in the past, and I'm sure I've showed everyone, some of you, how I've done it in the past before. Utilize total 2, look at the 15-minute. If you switch simply to Heiken Ashi candles, that'll give you an indication of trend. This can be a very good way to kind of accurately depict what is going on. So you really, like I said, it's subjective. You ideally you'd want to be in longs when it's going green, and shorts when it's red. But however, like I say, there is an ability to have that automated with buy and sell signals. You could utilize the 10 and 1 on it, and just add EMA MACD. So how would you do that? You'd do something like actually, let's just use a 4 and 1 here just so that I have it less to look at. So if you did the 4 and 1, you just went EMA MACD, that could be a something, right? Additional confirmation. So if you had that for a trend chart, the only problem is it depends on your chart time frame and yet again, of course, your length. So if you went 14 and 50, you almost got to go pretty low on this one. The only thing is it gets chopped up, right? So here is okay. These shorts, obviously you don't want to be running shorts at a local bottom. Same with over here, but I think at the start of a run is probably fine, right? Like if you hit the worst case scenario that happens here is if I enable Saturday, Sunday, let's enable Saturday, Sunday. This could be something that you do. Just give me a second. So if you ran it starting just at the trend follow here, that could be some. You've got some red candles. You got your EMAs flipping red, run shorts. But this is kind of intraday. So it's really intraday. And for me, truthfully, if you're running the 1 minute, I don't think you can set it and forget it. I don't think there is that ability to do it. I know, some other communities have tried to, and long term, it's just not successful. It just doesn't pan out. If you're actually looking to utilize SAR at a more hands-free approach, you should check out what's in the Degen course. KLOC has something on the 15-minute. It's basically running pretty well. I haven't looked at it, but if you had that ability to come in and on the 15, and let's say you did something like this, disable repeat signals, and then obviously come back for your long, no longs above. If you did that, you'd probably be fine long term, right? This would be able to be back tested. So then when I come back here and I go into the strategy tester, apply the back tester to the chart. So that's 74% profitable. Still a long trade time, 10 bars in trade. That's the main difference between trend follow and counter trend is your trade time increases significantly with trend follow, right? So that's why a majority of us here kind of are only running counter for now, and then we'll turn on trend follow as we see fit, right? So long-term results here, let's just see how far back I can go. I don't know. I think it's actually September 13th, 9/13. So let's just run a deep back test here and we'll see. So that's a little bit of an improvement. 8 bars in trade. The average trade is 0.34%. This is a little bit low, however. Really not that great, honestly. And I think you'll find the majority of SAR indicators like that. So let's not really focus on that. But for simple start and stops, that's kind of an old way, is just follow total 2. There's going to be some outliers that the market will kind of rally and outperform the actual average. This is the average of the total market cap. Another thing that you could do is you could simply utilize a watch list. right? So you could utilize a watch list, and if you only had your trading pairs in here, you could actually just quickly scan the market each day to see what it's doing. So today you'll see some of these coins are up big, like this DAR coin. I had some shorts going off on it last night. Really haven't seen what it's done. But something like that, like you could say, okay, well, these coins are running hard. Maybe that's what you run and deploy for that day. And keep in mind that would be very easily done. It's just you have to grab your filtering, grab these pairs, and then push alerts using TV Alerts Manager. So, anyways, the timeframes to start and stop PSAR to catch trend. Like I said, this could be something that would work decent for you. This is just the 4-in-1 using EMA, right? And then basically for a stopper, what you could do is you could probably do RSI and, run it up to 80 and then lower your shorts to, see, you still get longs at the top. So that kind of makes it worse, actually. I think if you just kept it at 60, that, like, if that's what if your goal is to just kind of have base hit longs, this is a decent direction here. But like I say, any sort of filtering like that is really gonna, you're gonna have some issues with that. So now, alternatively, what you could do is you might be able to utilize something like this. So if we get off of that, add in 10-in-1. And sorry about the Saturday, Sunday items here. Once I kind of add a few things, touches to Stokes and the ADX, it'd be nice to actually enable that, go through the default value settings again, is what I was saying. So ADX, let's see if we can, I don't think we can get signals just on ADX alone, but if you utilized EMA once again, so EMA, and if we went for, let's just go for 14 and 50. 14 and 50 trend follow. So that's a 14 and 50 trend follow EMA. That's pretty good. Keep in mind that is a little, that's a little shaky there, but for overall direction of coins and stuff, that's pretty good. You could have this on your manual trading chart and then use this to control your bots. So for me, it is still manual for trend follow on and off, especially on the 1 minute. But in the near future, we'll be looking to implement something like Klock's 15 or 5-minute SAR, whatever he's on. Now, ADX here, this is just, this will be subjective as well. It's like I say, not black box, so you could do whatever you want. If you wanted to just trade EMAs with the chop, utilize ADX for 0 to 25. So what that's going to do is that's going to give you direction, but it avoids the runs. This is where you can have something in like a counter that's going to just counter every move, and then you take your trend signals after, right? So that's kind of what I'm trying to accomplish within my take on the degen strat. Is I want I'll take trend signals when the market's chopping, with the knowing that the fact that I will be able to utilize some DCA to get positions out. And then when the market moves, I really only want counter running, right? So that's kind of the improvement on my end, even since last year, is just keep this sucker out of the large moves, right? And let counter do its work, because counter is it's quick in and out. Whereas if you're running trend follow, you might be bagged and just stuck, right? And yeah, sure, you can argue, you'll do well on longs all the way up here, but ultimately I think it's not worth it, because you will end up with a bag as market shifts, and then this guy's stuck. Whereas counter, it might be a little bit less trades here, but overall, in my opinion, it's less risk when dialed properly, because trade time is quicker and you're out. You avoid a long here, and then it's just countering, and then trade time is 0. So when you look overall long term, you have less risk running counter, just due to the fact that the trade time is less. So just a sec, I just lost the channel. Just gotta find that. Okay, so got that one. So now the next one, so 1 minute time frame, better to go bar close. Yeah, we touched on that. but I want to really kind of go over that again, because if you're actually on a higher time frame like the 15, so this is an ATR example, this is a VWAP example. If you saw the other night in chat where kind of I started with a blanket VWAP, right? So do a blanket VWAP, looks terrible. You add an RSI in, that helps a bit. Add EMAs for direction. That's utilizing once per bar close for these confirmed signals on this chart. So some of us also have higher time frame trading. It's a little bit safer, right? Obviously. So if you had this signal and you expected a long here, that will fire once per bar as well. You could run once per bar. However, you might also fire longs here. It might also fire there, might also fire there, there. Basically, anytime it gets close and or touches the VWAP, there is that potential. It is also not back testable. So, I mean, if you can just follow along with it, you could probably do fine with it. Like here, you'll get longs, you'll get a short up here. You will get more trades. But the thing is like I said, it isn't back testable data, so you can't really apply it, especially when you're utilizing the Miyagi back tester and deep back testing. So here, really, once per bar would fire here, and you're gonna be bagged, you're gonna be hurting. That's a 23% move up. I don't know that you get that unless you actually, that's a 55% move up. So let's say theoretically you had once per bar here. Let's just say you had a screw up on your alert. You'd enter here as price crosses and touches the VWAP line. It fires once per bar, which means it fires once in this candle, which is right here, or maybe it's here, right? It's hard to say. You can utilize the bar replay function. So if you did that, we'd do the bar replay function and press play. And basically, yeah, we'll see exactly what happened here. So you would have fired there. That one probably gets out. This guy would have fired here, most likely gets out. It really involves, and so now look at that. That one was just nuts. So it basically just shot up. So your VWAP line is there. Realistically, you would have fired somewhere in this area, and that results in a bag. So like I say, I'm still 50-50 once per bar versus once per bar close. I don't know what to tell you for your individual preferences. Just for me, I'd rather take a little bit less signals and know where the signal's actually fired. So actually in this instance here, once per bar close does a very good job of keeping you out of that bad trade, because basically that is a bad trade on the 15-minute as price just basically rockets up, right? So yeah, that one, like I say, it's you'll just have to figure out what's best for you. Ideally, start on once per bar close, because you can see where it behaves, right? You could see these are shorting. So that shorts here, you get out here. That shorts top a candle here, you get out here. This one shorts bottom a candle, should get out here. If not, there's enough volatility in that wick as price. You just have to know a little bit about a candlestick closes, right? So this guy, bar close, you enter a position at bar close right here, aka candle close. Price does actually come down 0.9%. You should exit here. Now price reverts up and then back down. And then this is where you short again. So this coming back up 2%, you're within that 50% retrace. If you had some DCA, theoretically, price comes up. You could tag up to almost 3%, and then it goes down almost 0.6%. You should get out of that trade, right? So that's where you kind of have to have a little bit of visualization within your trading. So now when to switch counter trade on or off, or to increase or decrease risk. So for me, counter trade is on basically all times. I have a few configs that I'm running on all pairs. It's just going to be volatility based. So for everyone that's on this call, if you haven't already checked out this, go over to the volatility index. You really need to check this out. So when you look at something like DAR, this is just some random coin that who knows what it's done. We really don't know, right? When you look at the volatility index, you really should be going over to the volatility for 360 days, filterable by your exchange. So when you go through the Degen course, it gives you the frameworks on how to utilize this. Basically, what you need to do is when you select your time frame, you need to have different settings per pair based on volatility. So if you do this as an export here, you'll see you'll have a ton here that are extreme and some that are medium risk and or low. So what I'll do is if you do the export, what you'll find is if you open up this text file, this is a perfect text file that you can utilize and open within TradingView Alerts Manager, TV Alerts Manager. The only thing is it does need some filtering. So here's low risk, right? These are low risk. These would be pairs that theoretically over the past 360 days is low risk. Just want to make sure that that lines up. Yeah, so that's over the last, this is 360 days. However, you do see some that have extreme risk. If you wanted to go for kind of just a mid-grade baseline, you could use an average of the 14 and a 30. If you see an extreme risk in here, basically trade it as an extreme, right? Anything that is actually low risk on this will be hard to be found in the past 14 days. But if you're looking for 360-day data, that to me should be on a higher time frame. If you're simply scalping the 1 minute, utilize the past 14 with the prior knowledge that the 30 and the 60 has been extreme volatility. So you almost need to go and or up to the 90. Excuse me. So now when you go back to switching counter trade on and off, I don't really think you'd have to ever turn it off. Like just utilize a higher time frame to trade and or stick on safe pairs. Like this is Gala. If I look at DAR USDT, it's probably bagged, probably not doing so well. Yeah, that probably gets bagged there on the 1 minute. But keep in mind on the 1 minute, you're never going to run this. Or actually, no, you'd get out here. Surprisingly enough, you'd get out here because you have that retrace down, almost 2%. So you get out once per bar close, you avoid this scam wick where it just pumps up 15% in one candle. And then from here, you're just kind of in and out. So surprisingly, you'd do fine on that if you wanted to trade it. To be truthfully honest, like if you're running a low time frame and you got counter running, just load the parser and run the parser pairs. You're not really going to have any issues with those pairs. Like I say, they're pretty stable and it's not, market's not that volatile. You're not trading these guys here. So that one is, yeah, I'm going to call that one good. Like I say, if you want to just leave it on or off based on volatility, you can, and increase and decrease risk, just do that based on the market sentiment and or technical analysis, etc. If you start to see bags on your accounts, then you need to adjust something, right? So now, when to switch trend trading on or off or increase or decrease risk? I already kind of went over that one. Basically, I think you could just utilize something like you could utilize this 10 and 1. You could utilize HA candles for direction. And like I say, another thing you could do too is your coloring. So you could go through your coloring and make it different, so bright green, bright red, that's helpful, or go white and blue and then utilize that for your direction. This is actually a pretty good way to do it, because then, like I say, if you dialed in this guy for counter, let's see if we did this 14 and 50 for counter, and then if we just use RSI to there and we went EMAs for trend direction, what would that look like for counter? So yeah, you get shorts at the top. Yeah, that could be something that you could run too, right? You could utilize these as actual trading signals if you wanted. Like I say, you just have to use a little bit of DCA with that. That's another config that you could probably look at. Just definitely make sure that you have some back test before you press play on anything, right? That's the main thing. So now just question is asked, can everyone see my screen? Can you all see my screen? Okay, it's a little blurry. Okay. Yes, yeah, that was just the HA was only used to show what you could do for direction. So the question was asked how to identify and activate trend. So you could use EMA, MACD, and then you could have HA candles just to show the direction. You're right, it does get rid of some signals there. Yeah, so that solves that. The 10-1 tool is best in a bull bear chop market. Like I say, counter I think for chop is very powerful. Even trend follow is pretty good. You could utilize something like this EMA MACD. In the future, like I said, going to add out a bit more into the stochastics. I think we got the ability to really have some laser entries with a 4-hour stochastic, especially on something like min and max value. That'll be very helpful. And then ADX going to build out the DI positive min and max, probably for both directions. And then lastly, what we're going to do is we're going to add in the ROC to the 10-1 as well. So 10-1 is just going to be all powerful. Like I say, kind of interested to see what some of you come up with filtering there. And now to the next question. Okay, so the next question would be, how can we build combos with these? Well, that's pretty easy, but basically, TR, just go through it and run up with your selector. So you got MFI, ATR, EMA, ADX, etc. Select what you want, and then that applies the filtering to the chart. Keep in mind, you really have to know what each one does before applying. But if you just started with kind of our shared charts, I think you do well. Like this this 15-minute chart that I got here actually does pretty good long term, right? Like you could start with something like that, you'd have no issues. Just trade long term coins, like trade parser pairs. So now next one here. How does one create the best DCA so that one spends less time in a trade? So that plus Sab's question on how long to set or how long to cut a bad deal for DGen setup. I'm going to answer these in the same breath here, or any other decision criteria to be considered. So basically, I got to get rid of bar replay mode here and then come look at your chart. So the basis of the first things that I start is I look at what do the signals entail. The best way to actually do this is by utilizing the back tester and then figure out your max drawdown and your max percent distance from entry. It doesn't make sense to have DCAs past there. So this is obviously this one's a little bit hot and heavy. Let's just see if we could tweak this a bit. So trade direction 15 minutes. Let's say we're using one of the 10-1s there. Trade direction both. Let's just dial this back. This is a little bit much. So if you wanted to do DCA, let's say you had 10 DCAs, scaling, let's increase scaling a touch. It's basically all just math. You're playing with scalings, you're playing with volume scales. That gets you max drawn out. So that means that you fill all SOs and your max percent distance from entry here. And you see here, profit is less. You're using less DCA. But you're still getting out. So really, it's kind of a fine tune between max percent distance from entry, your max drawdown, your max spend, how much you're willing to risk and spend on it. Probably the best calculator I can get you right now at this time is going to be over here. Let me just find it. DCA calculator. Okay, here we go. This would be the best this would be the best one to do it. So this would be the best one. So really, this was built way back in the day from Darkshire and Shinobi. So thanks guys, and shout out for the help with that. If you really want to fine tune and utilize your DCA, go to this link. I'll drop this in our channel once again. Just give me a second. Yeah, so I'll just put this in the pro channel for everybody to have, just take a look. So pro channel here. So if you actually wanted to utilize this, you can actually fine tune and tweak your DCA. So this is an old number. To utilize this, go file, click, make a copy. Otherwise, work on the chart and then work on the back tester. So if you can utilize the back tester, you ideally want to come up with configs that utilize less SOs, right? So you want less SOs in there. So utilize filtering such as EMAs for trend direction, RSIs, VWAP can be good, etc. And then the other thing that you can do is once you focus on that, if I go back to here, ideally you want to cut trades that go past that or hit a certain time period. So the next thing that we're kind of building out for Wickhunter hosted, Damiano's working on it. I think we'll get this in one of these next releases. Is just simply a time-based stop loss. That's it, right? So you enter in here. If it's not closed in X minutes, market sell it and close it, right? Because how many times do you see a trade linger, and if you're away or something, you know, ideal, like the point of degen is really this is just give me quick trades, quick profits, quick in and out, and that's it. And let's not focus on holding things past 1 hour, 2 hours, 3 hours, whatever, right? So I think in the next versions we could have our time-based stop loss. That'll be really good. That'll be helpful. Yeah, other than that, decision criteria to be considered. Yeah, if you're against the overall EMA. So if I was actually bagged in a short right now, I might be a bit hesitant on this coin, right? Because EMAs have been up for, you know, quite a long time. We've been up for well, granted this is a 1 minute chart, but if you actually hit this on a higher time frame scale, go do a little bit of TA on it. Look at it on the 4 hour. Yeah, I'd be pretty scared if I was in a short on this coin. So like I say, I utilize a lot of TA and just go look at the daily chart on a chart that has a lot of data. So the chart that has a lot of data is just always going to be your spot chart. So yeah, I mean, really, like, I would be scared if I was in a short on this coin because, yeah, I mean, it just has, look at these wicks in the past. Like that is geez, that's almost 100% in a daily wick up here, right? Granted, it comes back down, but if you're running degen, you probably get liquidated before that. So that's one of those things you wouldn't necessarily want to run that coin. So look at prior data it's always very helpful to utilize past data. I know it's not indicative of future, but I mean, it gives you an essence of what is this asset and what does it do? Like, so if I see something like that, yeah, and I'm in a short and it's bagged, you know, you might look to try and get it out at or near entry, right? And or cut after a certain amount of time. Like that's the best part about running counter is if I'm just, let me just give this a refresh because I've got all these charts screwed up here. But counter has very quick trade time. So for me and for anyone here on this call, it doesn't really make sense to hold those positions past a certain time frame. The time frame is kind of subjective. For me, it's like if it's just counter, you're probably only better to let that trade run for maybe an hour or two and then after cut it. Ideally like a 4 hour is fine. Because quite often what you'll see is you'll see, let's just look at that DAR coin. It's hard to explain, but basically you'll see there's a period of time where you'll get a nice run up and then you get your retraces where it cools down. So that's actually in a 1 day period. If you're bagged in a short here, and if you had bought all the way up to here, you'd get out. but you need to just kind of look at it subjectively, as in within the trading realm, the trading range. Like, another thing is a range break here. So clearly here, this is a range break. So if you're in a short here, you don't get out. Ideally, you want to cut it at a range break, because that's going to be a minimal loss compared to what this looks like. So if you look and you're in a position, a simple thing to do can be just set a manual stop loss at touch of, above the last candle body highs, which is going to be this price, 0.2041. That would be as if you're in a manual position management mode, right? Alternatively, like a time-based stop loss can be utilized, or you basically just cut it based on percentage of way too, right? So that helps a ton here. So utilizing DCA is kind of subjective. You got to utilize the calculator plus the strategy, but ideally you got to start with the strategy, understand what the strategy is going for. Do you DCA it, or do you cut it as a loss, or is it your spot account where you're just trading quality pairs, so it's fine to hold those? Like, that kind of, you really need to establish what you want to go with. Create the best DCA. Like I say, you can utilize, this is close to 2 scaling, so you'd have the ability to change that. This keeps your average entry price within 50% almost the whole way down. Or you go larger orders and lesser DCA, like lesser DCA amounts, or you go smaller orders and more DCA. For degen, for anybody on degen, I kind of want to reiterate, like, the point of degen is not to really DCA these moves. That's not the point. The point is to only have a certain trade range and quick trade time. So I think to revisit degen, you'd really want to look at something like this. So if I kind of just enabled this, basically, let's just do a quick example here. So if I'm 5% entry, let's call it 5% DCA. Let's go with 10 orders. Degen, let's start at 0.2 for DCA. That means that if you enter here, you'll have DCA 0.2% below to hopefully get you out. And now let's just look at the scaling. So the total SO deviation here is very low, 2.5%. Let's say we want to go to 6%. So how do you do that? So you got to just adjust the numbers until you get up to that 6%. Keep in mind, I have to click out. So I have to click out before that. Oh, sorry, that's volume. I'm looking at the wrong one. Sorry, guys. Step scale is what will determine your total SO deviation. So here that gets you to 3%. If I went up to 1.3, the thing is with this low of a deviation, it can be hard. So you really have to have a higher scaling. So yeah, that's too much. So let's go 1.25 and try that. So that's 6.65% DCA starting at 0.2. Your DCA is going to be layered. You really have to utilize the calculator to see where it actually ends up. So that's where you'd have to input this into here. I'm not really going to focus on the calculator right now. I'm just going to focus on the chart. And then from here, your volume dictates the total trade volume. So here you see this bot would not exceed 100% of initial capital. So your max spend's actually 85%. You don't have anything less than, you don't have over 100%. So you have 9,000 used in this trade, which would mean that you're under 1x. So if you ran this on 3 pairs total, you would hit just under 3x. So that's the main thing that you have to be keeping in mind of within the DCA strats, right? So you always want to be aware of the most important things. The most important things are always going to be the max amount of the bot usage. So you don't want to exceed that. Your total SO deviation, that's your total drop protection. Max spend is total spent on the largest trade. This is derived from hitting the last SO. And then your maximum drawdown is the max percent distance from entry before a trade closes. So that here says that running this config, you will hit negative 14% before it reversing into profit. So whether or not you hold out that long is kind of up to you. Alternatively, you look to utilize a stop loss. So you could say, okay, well, I'll run a stop loss at, and this is obviously going to probably be in a loss, but you could run a stop loss below it as a worst case scenario, and you see, yeah, you're actually in a loss because this is not good risk to reward. That's too much DCA with a stop loss that's too far away, right? Something better might be, okay, well, let's only do like 3 DCA orders, and then you have 3 DCA orders here to 0.76, and let's say what happens if you throw DCA or a stop loss at 1%. So you're net even. So you're close there. But like I said, that would be how you fine tune and tweak it. So this might be actually possible. It just depends. Like depicting backtest results on TradingView is kind of hard because you don't actually get the order book data. So this, like if you found one that was actually profitable, this is getting close here, right? If you found one that was profitable within here, I would hesitate to run it on real funds without backtesting manually because you don't know where the candles enter and close, and you don't know if you always get the fill. And so getting the fill is one of those things that it's like easiest way to explain it is the just because the chart comes up, touches your price, doesn't mean that it has to fill your order. You know, you might be 500,000 in that trade. You're not going to get out, right? So price, generally speaking, has to go past your price on TradingView to ensure that you get a fill. So that means that if I have an entry that exits at 20382 or whatever this is, 0.20382, I ideally want to see price come up one tick higher, like 0.205, and that way I know I would get out because there's still some orders being filled up here and then reversing, right? So that's pretty easy. So the cut ideal for DGen, like say you can utilize the back tester, cut in a certain time period. I think like 1 to 4 hours is ideal, and or cut on a range break like this. If you had a short here and it was bagged, cut it on a range break. I don't know how many times I've seen something like this, coins pushing higher, and then the next leg, and then you don't even bother with that. Look to cut on the range break, basically. And then I'll just pass it off here for a little bit. I just gotta drink some water, losing my voice. Some details about TTM and how to configure. And maybe K-Lock, if you're on with your mic, maybe you can go over the TTM right now. And then we can go to some questions after too for the last like half hour. That's all good. We'll see if he's got a mic. Oh, just a sec here. What do we got? Okay, no problem. Okay, yeah, so he's busy. Okay, that's all good. So what we'll do is if we looked at yeah, really, I mean TTM, what you need to start doing is just grab TTM. And so yeah, I don't really want to use that one. So TTM, that one might be better for Frank to explain. If I just looked at, it's gonna be here. Let me just find a config that has it. Yeah, I'm actually not using TTM on any configs here. So if anybody can chime in on TTM, it's additional filtering based on squeezes. So if you were to simply just look at TTM in itself, I don't know how to work it in a way to explain it. We can figure out how to set it. But basically, if you just Google TTM, so TTM trading definition. Oh, sorry, TTM indicator definition. TTM squeeze indicator looks at the relationship between the Bollinger Bands and Keltner channels to help identify consolidations and signal when prices are likely to break up and down. So that would be basically my starting point. Like I said, I haven't even used all of these things within it. So you're utilizing a relationship between the Bollinger Bands and the Keltner channels to identify consolidation and signal a breakout. So TTM would be, okay, you're getting at or near the bands and the channel. So for here, let's just start with, gosh, too many charts open. Let's start with this on a 15. Yeah, let's utilize this one. Let's get rid of everything on here. Load a fresh copy of the 10 and 1. So if you just started with TTM, I think this is the only well, yeah, this is one of the only indicators on TradingView that has actual TTM signals. So this is let's just sec here, just a sec. So this will showcase your TTM. So that's your time frame length. And then this is your items on the TTM source, trend type, or counter trend. So here's TTM for counter. Let's say go to the 1 hour or something. Like basically, I don't even use TTM, so I won't be able to really go over that one too much. Somebody else will really have to go over that in the chart, or like I say, just do some research on TTM, and I'm sure you'll be able to figure it out. It's a relationship between the Keltner channels and the Bollinger Bands, as well as additional filtering. So this could be used for signals in itself if you wanted. That's counter trend. I know Frank really uses it, so I would push that question to Frank. I think he's not on right now, but yeah. So for that question, utilize Frank. Lean on Frank. Send him a DM, and/or send K-Lock a DM on that. Now, for this, I'm just gonna take a quick 5-minute break. Just need to get something to drink here. If you have any other questions, drop them in AMA questions, and then I will be right back. Okay, all right, I am back. So, what do we have here? So let's take a look back in question. So tick size. So that's actually an easy one. Very easy. Tick size is basically the order book size. So, if you actually look at, I'll just look at the order book. And I'll just show you. Here's an example. So tick size is going to be the next available price to fill. So this is what tick size is. So I don't know what this is. This is obviously an order book of something with a price right now of 418.41. That's the mid-market price. Now the bidders are trying to buy here on the left, and the ask is over here. They're trying to sell. The tick size is the order that you can actually place right here. Yeah, okay, this is better. Sorry. Although I do wish we could go back to these prices here. This is 2018 pricing for BTC. So the current price is 9262.50, right? This is the depth. This will show you the overall. If this was on the lowest denominator, the lowest scale, you see that each tick is 50 cents, right? The problem with tick size is when you get into some of the lower sat value coins or lower value coins, the tick size will actually be a high percent. Like one tick might be 0.5% or 0.6% or whatever, right? So when you run on those, especially on Bybit, so if you can come over here to Bybit and you can look, so if I look at what is the highest percent change per tick, so this coin here, Zen, so your percent change per tick is actually almost 0.5%. You're gonna have issues on a bot with that going for a low TP, because there's times where your DCA will put you in between, and you might have a limit order that sells at a loss at a tick size that is like it's hard to explain, but it would be a lower tick size. Calculation is done so that it thinks that it's in profit, but then you basically you sell it at a loss based on that, and that would be 0.4831% between these in a nutshell. So you have these items here sitting here. You across them, it's different, right? So you'd have all everything is 0.5% in between, and like I say, oh, just gotta mute. Sorry, just get some muting here. Sorry, just a sec. Okay. Yeah, but basically that's what the recommendation is. So if you're on Bybit, look at tick size, and you want to trade items that have a tick size and high volume. So I really would go for the high volume first, and then compare tick size. I wouldn't really trade anything with a tick size lower than 0.2%. That being stated, your TP should also be greater than that tick size to ensure that you are filling and actually in profit. Like I wouldn't run a TP of 0.2% on VET on Bybit, because you might have market or losses, right? So you always want your TP to be higher than that tick size, so that like if this is 0.5% between, what if my order is in between here? What if my average price is in between? You know what I mean? Because by the time you get rounding involved, doesn't mean that you fill at the tick size. By the time you add DCA, your average entry price can be between two ticks, and then so then when the bot places the limit order, it might be out, right? And like I say, if it's a 0.5% tick size and you're going for 0.2%, you might actually sell just a bit above your entry and lose, or below your entry, right? So anyways, that's pretty much about it for the tick size. And then how do you use it to select pairs? Like I say, on Bybit, I would really go with the total volume. So coin market cap, go to coin market cap, or actually, yeah, so you can do it this way. You could go to exchanges, and then go to derivatives, and then you're going to go to Bybit. Basically, I would, if you're on Bybit, it's kind of tricky because the volume is just not really there. So what you really want to do is on the perpetuals. So this is the US, sorry, that's the perps. That's BTC ETH funded. This is these are the USDT contracts. I would probably stick to top 20. Yeah, realistically, top 30 is such a jump. Top 20, you get to 50 million still, right? But now when you go to top 30, you're down in half again at 26. Top 40 is not doable. You're only to 15 million. That's not a lot of volume. So certainly, if you're on Bybit, look to just run top 20 for now. Like I say, some of these coins are different. I've never even really heard of this LDO or whatever, but start with the volume, and then from there you can go to the volatility index and search by pair, and then you'll be able to see the tick size. So this has a tick size of 0.02%. So you'd be fine with a 0.2% TP. You wouldn't have any issues there, right? There's a lot of liquidity on it. 24-hour turnover is nearly 50 million. And you go from there. But like I say, you don't actually need this here. You could start via grab top volume. So this is million, and then go to, see, unfortunately we don't have numbers here, but if you went down to LDO, this should be number 20 or whatever, and then your tick size is still okay here, and then you verify up here the tick size is fine on everything else. And so after that, basically that would be how you utilize Bybit to trade. You really got to start with the volume first and then the tick size. And like I say, if you find one that's high volume but a bad tick size like this would be questionable, I wouldn't probably run it. Or even this guy, yeah, that's there's some volume there. What is that, 43 million volume, and tick size is 0.21. I really wouldn't run that. Don't run that. Like I say, you'd have to have a TP that's 0.5 or at least greater than this this tick size, right? And then when you look at the volatility index, that can be another thing to tie in. So pair screening for me, it's kind of pretty simple. I'm mostly just running the parser pairs. You can utilize that by coming over here, parser, load the parser, and that's the pairs that I normally trade. But if you're on Bybit and you don't have access to that, this might be the way to go, is just filter by volume, right? Have your cutoff at, let's say, 43 million or something, cut it off at Atom. And then from here, look at the tick size, exclude ones that have a higher tick size, or make sure those pairs have a higher take profit. And then the third step is going to be look at the volatility, right? So something like this, APT, if all is extreme risk, you probably want to trade that on a higher time frame chart, and you probably want to have this sucker on maybe a well, you could run it degen, hot and heavy, but don't definitely have it on a large balance, because anything that has extreme risk displayed like this, you're talking 100% candles up, 100% candles down, etc., stuff like that. So you really got to be careful what you throw at it. You could also filter via only trading low to medium on a config, and then the highs and extremes maybe you just keep for your degen, right? That's kind of another thing that you could do too. Really honing in on the pairs can help, because these coins will move more fluidly than like XRP will per se, right? Like even FTM is actually my best pair on Binance. It's shown as a medium currently, but you have the ability for extreme. So so that pretty much does it for tick size, how to select per pair. And if are there any other questions? Maybe what we could do is we can just open it up for voice for about 10 minutes or something. I don't see any more questions in the chat. So if anybody wants to chat in voice, feel free to unmute yourselves. And so just to confirm, like, we will have some extra things coming. The 10 and 1 will get the stochastics, min and max. ADX will get DI positive, negative, and ROC will go to the 10 and 1 as well. So like you say, if If you are on the 6-1 already, taking a look at it, it is very powerful. We will add that same capability into the 10-1. And then just from there, it's just the ability to fine tune and what you want to see out of it. So, but for the actual ROC, I just got to figure out a way that I can share a video without it being shared outside the channel. So I'll have to figure that one out. But I will do a video kind of on the ROC and how you can utilize it, what you can do with it. But like I say, we're just at the stage where we don't want anything shared and or leaked outside of this channel. Okay. How do you know if we are in a chop or a trend? Well, basically, personally, I just start with where is BTC direction headed. So clear trend for me is just basically, yeah, your 1 hour, your 4 hour has movement. This would be a trend. This is chop. Now this is trend up into chop. We're currently at chop right now. We did try to break out earlier. So in here, in these areas, this is where I believe you can run based on support and resistance. So you would be able to run a degen hot and heavy and hard in this area. The main concern is now a range break. Whereas the trending moves, you either want trend longs or you want to have a safer counter trend short to counter it. So to identify trend is actually fairly simple. What we'll do is let's just use ADX. So average directional index. If you haven't used it before, just add it to your chart. This is what it looks like. So ADX in its truest form. Actually, see, this one's not too good. So 25 to 60 is a clear trend. So anything above here is a clear trend. This is on the 4 hour. Granted, momentum comes down. On the lower time scales, I would look for something like this. So you'd have your chop is in areas where ADX is 0 to like 30, let's say. So you could utilize ADX as a cutout for your degen, utilizing it based on a higher time frame. So for me, I would yeah, a lot of these indicators will kind of lag, as you know, they're not leading by any means, right? This move's already started, or sorry, the move starts and then it takes a while for it to come back down. So what you could do is you could either use support and resistance based technical analysis and just say, okay, here's my lows, here's my highs. This is clear chop until we break above this area, and then you kill things, or you utilize ADX. And so a good way to do it is if you're not sure, simply just do this. I'll show you how to utilize ADX to actually kind of come up with what is trend, what is chop. Turn the back tester off so you can actually see what's going on. Disable this, turn this to 7 so you can actually see. Now, if I enabled ADX on the 1 minute time frame, 0 to 25 is going to be trading chop only. Past that, it's going to be oversold or a clear trend, big condition, right? So flip it to a 15 minute, this is chop only, right? So that would trade chop only for you. This is a clear trend, right? So now when you go 25 to 60 for the opposite side, this is a clear trend and you'll avoid the chop. You should have signals only in a trend. So ADX for me, 0 to 25 chop, 25 to 60 clear trend. So like I say, you can utilize the ADX on the indicator, or you could use the technicals and just look for support and resistance levels. So now, lastly, the other thing to just kind of go over is, well, really just future plans. So the 10-1 will get a few updates. Hands-free course obviously coming soon. I think this will be a big year for everything. I still think ultimately we'll see highs of and or around 47 to 64K. So when you're actually looking at things from the high time frame, like daily scale, this would be where I think you really are going to want to take profit on any of your spot positions and just kind of look to scale out. I still think we have room for probably I don't know. I think it's we're almost into February. I think June, July, August. I think we'll be up here. That's kind of my ideas is we get up to this area, look to scale out. I don't think we break this all-time high. I think we kind of come up to this 50 to 60, and then we kind of come back down to the 30s, and then further high. So I think right now in the time, if you are if you have any spare capital available, do try to look to deploy it into appreciating assets. Majority of us are running degen from the degen course, which means that we basically are just stacking USD every day. Like I say, that's how Ninja Whip It and others have done 50 to 40% in the past month. That cash should really kind of go into appreciating assets or be used to buy the bottoms. Some of you kind of may know things that we've done on other channels, but grid is also a very good way to ensure that you're always profitable long term on coins that you want to hold. You can always set your bottoms and your tops and just let it do the work. But for now, like I say, just keep on the good work. Utilize the back tester to the full extent. Utilize TradingView Alerts Manager to manage your alerts. For now, we are working on a standalone version that will work with any alert function, and then that will allow us the ability to kind of update the scripts again. Unfortunately, that TradingView hid some of the data on us. But other than that, really, a couple more questions here. How many DCAs are recommended? I went over that, so you'll have to kind of rewatch the recording if you missed it. But generally speaking, you want to fine tune the DCAs based on what your goal is. So if the goal is just get the trades out, then utilize DCA to get the trades out. Utilize some DCA to provide protection and get out on the retrace. It depending on the time frame you're trading, you might need more or less DCA. For you, Tucker Trades, if you're new, I would probably suggest just simply starting on something like the 15. This would be a pretty good config here. However, keep in mind it isn't a lot of trades, but I think if as you're new, it's best just to kind of get your feet wet, and there's no shame in only taking 3 to 10 to 20 trades a day when the market's moving. I think a lot of us get enthralled in the degen lifestyle where you got 200 trades in 2 hours, whatever, right? Like, so for anybody that's new, like just clarifying, like you probably would want to start with something exactly like this. You want to start on the 15-minute time frame. Don't forget that when we launched Wink Hunter, the market was just moving rapidly. We started with the basic config on the 1 hour, right? Don't forget about those old configs, the 1 hour 14, the 15 fives, the 5 fives, the 3 fives. And no, you really got to be aware of the capital usage. So here, this would be a fairly safe, or actually a really safe config. You have your initial capital is $1,000, and then your max amount for the bot usage is 1.3 times that. So you're usually using $1,300 once all DCAs fill at a total DCA deviation or total drop deviation at 18.75%. So that means that this config would withstand an 18% drop and still DCA it and then exit. The average SO used here is 4 out of 32. And so you'd have to just do the math to see where the fourth SO lines up. Some, however, do tag 7+ SO. So anyways, long story short, you always just have to be aware of your total capital usage. You don't really want to exceed what's in your wallet balance if you're new. That's where you would receive the risk of liquidation. So if you're new, stick to spot, and or if you want to go on to futures, I probably would look at something that's not more than 2x leverage and don't exceed your position sizes. Anyway, so I think any other questions? Might just open it up for 10 minutes for voice, and then I'll kind of hop off unless anybody else wants to take over here. My voice is killing me here. All right, nobody wants to talk, so we'll give her 5 more minutes and then we'll shut her down. So any more questions, just drop it in chat if you can. Yeah, okay. Yeah, okay. So yeah, no problem there. Yeah, no problem, Jerome. Good to see you. Hopefully everything's well. So the 6-in-1 would just kind of go over, and what I'll probably end up doing is just cutting this and not putting it on YouTube. I just gotta find it. So 6-in-1 starts with the rate of change. This is a technical indicator that's built into TradingView. And so basically what you're gonna have to see here is you're gonna have to match your chart and your time frame. This is where it gets really, really interesting. So this is what I was playing around with last night, sending some snips. So here's a 1-minute time frame chart. Let us focus on imbalances. So let's only ping areas for, rate of change above 0.45, or, shorts here. I guess that'd be the longs, that'd be 0.65. So what you could do is you can start with your basic config. So let's start with EMA, RSI, VWAP, ROC. So let's start with a 14 and 50 EMA. You know what? Let's actually drop the EMA. Let's go just with a one minute EMA on counter. Let's utilize the RSI 5 to 70, 70 to 95. Now this is what's really cool is, so when I have a value here in the chart time frame for VWAP, this is VWAP on that chart value. Let's just go with this. Let's go with 0.1 and 0.2. So this is a very low VWAP. You wouldn't technically normally be able to run with that, right? Now, if I flip to the chart, your rate of change is going to be, like I say, the shorter the length, the more reactive it is. The longer, the less reactive it is. So if you flip this to, let's say, a 20, it'll display the rate of change of this asset, and then you can plot your highs and your lows. So anything below 1, -1 looks fine here, and anything above, you know what, for this instance, I'll just an easy instance, 0.9 to -0.9. Come on over to here, and so what you're going to do is you've deciphered you only want signals in this area. This is an extremity, so I want signals in these areas where the rate of change is very high. This is designed to snipe entries better than anything that we, or a lot of other things, right? So let's do this. So let's go 0.9 to 0.9. Now you'll open it up for more trades. So what's interesting too is when you disable it, you'll see this is so you're really not relying on VWAP as much anymore. You can have a lower VWAP basically. But when you utilize the rate of change, it's just stating, okay, yeah, the rate of change is very high. This is a high probability of a reversal. Let's get into a trade right there, right? Now, if you even wanted to tweak it a little bit better, what you could do is, oops, wrong script, go over to rate of change. You can make it this a little bit higher. So let's say on the longs, I only want to, let's say I want to go to -1. That should solve a little bit there. Or let's say you leave it and you go with a little bit higher VWAP. So trend follow, let's say you want to go to 0.3, counter trend, you still want to be at 0.5. This is another way that you can smooth entries and get better entries. So now you're pinging the direct bottom here. You just don't have a lot of actually, you got some shorts here. Now, probably the best way to look at this is find a high volatility pair, and then you'll really see the rate of change, obviously changing. So here, this obviously would need a little bit of tweaking because this is a volatile pair. So here I'd go, you almost want to be above 1.5 or 1.9. So kind of just plot your highs, plot your lows. This gives you the ability to filter VWAP in another way, right, on top of it, or any other condition. So let's say we tried it at, let's try -2 to 2. Let's see what this does to the entries here. Yeah, see, still pretty good. However, down here, you're still allowing trades. Now, this is dependent on the coin. So, obviously you might still need to have a higher VWAP. Some of the coins are less volatile, so you can run a lower VWAP, but rate of change allows you the ability to filter things, based on what is the asset actually doing. So here you see these longs ultimately will get out, but that might be a little bit too much risk. You might want to run at a 1. Right, so you get in here, this probably gets out, these pick the bottoms. Very helpful based on the chart time frame, very helpful on high time frame too. And also, like I say, you can be a little bit quicker with it too. So you could use the baseline as a 9, and then come down, change it to a 9, make sure that this matches. So that's kind of really what you have to do. And then from here, plot your highs and your lows. So anything above kind of 2 is actually really good here on the 1 minute, but you might want to be quicker, right? You might want to have quicker trades. So you might want to go, 1.5 and 1.5 here as well, right? Because this is finding the outer extremities, right? So this is saying I want trades in this area if VWAP, EMA, RSI align, right? Especially over here, like this is a large rate of change. We're past our threshold. That's where we allow signals. It's extra filtering to apply onto the existing conditions. So as I said before, this will be coming to the 10 and 1. And then whenever Sam gets back, he'll show us maybe a little bit more on how he is running it or was running it, but that's just kind of what I see, right? So it'll allow you additional filtering. Whereas, let's say if we turn it off, you'll see the difference right away. Turn off rate of change, and like you have some more shorts, or you also have some more longs. This is actually pretty good tuned on here, but when you go to ETC, like I said, I was looking at it, and you can run very low VWAP but utilize rate of change higher, right? So you could do stuff like this where you're 0.3 for both, and then your rate of change is 0.73 or whatever. You got -1.5. That's actually pretty good. These are nice entries for the most part. If you can enter here, get out, a little bit of DCA, whatever, right? Or alternatively, what you could do is if I reload this, just give me a second. Alternatively, if I reload this was kind of shared to me from Sam, just an idea on what to utilize. So this is actually, it's not a lot of trades is the only problem. You don't get actually very many trades at all, but this is what he was running. So he was running a very slow rate of change and then high value. So 15-minute rate of change, 288 length, which is long. So it's going to be a long length, and then plus 20, -20. So what does that actually look like? Looks like this. Oh, get rid of that one. Let's keep the blue one. So he would have 15-minute time frame. Length is 288, so this is going to be a very long, right? So he's only looking for trades when it's above 20. So that's your cutout here. This might be okay. The only problem is it's only looking for trades when the market's really moving, right? So you're not going to see a lot of trades here. Like even just looking here, subjectively, you might be better to go like on the 12s, go to the 12s, at least get you a bit more trades, right? So that would be exactly how you use it. If I wanted trades in that area, go to 12 and go over to there. So now I'm going to allow trades in this area. That is still very good. These are shorts at or near the top, the exact top, and this is right when the market is very much so moving, right? So you could rely on that. Like that is those are sniper entries. Or alternatively, you could do kind of a lower time frame, lower rate of change, lower VWAP, and just and go degen like some of us have done, like especially like Al there, right? He's running, I don't even know, 250% or something in, or 300 some percent in like days, just nuts. So that's how you actually utilize it. But like I say, you do really need to be able to visualize it and say, okay, I want signals in this area because the rate of change is high. This is high volatility. This is where I want to trade the most, right? So this is an extra way to cut out and utilize it. And like I said before a few too many times, this will be coming to the 10-1. This is just to trial it out, test it out. Really like it. I'm really happy with how this looks. This is, sniper entries, right? I'll be sure to post these in main chat. And like I said, I'll cut this video up a little bit just so that we have this portion just only for our channel users only, because like I said, I'm not giving out this free stuff on YouTube so others can copy it. So anyways, I think that's about it. And I'm going to pop off. So I hope everyone is doing well, and I hope you're all staying safe out there. Take care. I will make this recording available. Any other questions, just don't hesitate to ask in the chat. I'll get back to you later. And then from there, like I say, be on the lookout for 10-1, getting a few added tweaks, and life will be great. So we'll chat to you guys later. Enjoy your day, and we will catch you on the next one.